insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Just business news, we're news for business people.
Good morning, you're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the FNOQs. I'll talk about the general trade setup. So as of now, if you're looking at it, the trade setup does not look bad. It's rather muted as far as Asia is concerned, but the SGX Nifty is trading with a positive bias. It's up almost 20 points, so above the 10,300 mark currently. So over the last 2 days for the Nifty have been rather strong, so this adds to that. Now all the ADRs ended with a positive bias. Tata Motors was up almost 1.6%. The other ADRs, ICICI Bank and Wipro, were up almost 1.3% each. So overall, the cues that came in from the overseas markets were also rather strong. Now, as far as crude is concerned, crude is trading lower in morning trade currently. But if you're looking at what happened as far as Friday's trade was concerned, it was up almost 1.2%. Now, there is a lot of traction that's happening in crude, but it posted a second straight weekly loss, what we saw on a weekly basis. One of the reasons that is happening is that the US drillers are now adding rigs in the field to counter the OPEC efforts that are there to actually curb the supply glut. So that is the story as far as crude is concerned. Base metals on the LME were rather muted. Two of them did well. So nickel and zinc were down in trade. Nickel was down almost 0.8%. What did well was lead. Lead was up 0.6%, but muted trade coming in from tin, aluminium and copper. But the real game is in China. Very strong Q. Steel is moved up almost 3% now. Aluminium and rubber have moved over 1% in trade. You have copper, which is up in trade. So overall, commodities in China are doing well. Gold posts its third weekly loss, flat. It's trading flat in the morning session. So gold, not enough traction happening. Now, as far as flows are concerned, FIIs were net sellers to the tune of 675 crores in the cash market. This is the NSE provisional number. DIIs bought in almost 1,243 crores in the cash market. This is the actual number. So overall, DIIs have been aggressive buyers. On the month-to-date basis, FIIs have sold in 3,500 crores in the cash market. DIIs have bought in almost 5,200 crores in the cash market itself. So it's a liquidity market that is driven by DIIs itself. Now, if you're looking at what's happening as far as the markets are concerned, the Nifty gained 1.5% over last week. Majority of the traction coming in the last two trading sessions. Nifty FMCG was the best performing index, led by HUL as well as ITC. Both of them did extremely well. Nifty Pharma also did well. It gained almost 1.5%. What didn't do well was the Nifty PSU Banking Index, which saw losses of almost 0.8%. But today, Goldman has upgraded SBI and PNB, so it'll be interesting to watch the Nifty PSU Banking Index. Nifty was up almost 100 points. What contributed? ITC leading the FMCG index. The HDFC Twins, ICICI Bank did well. What didn't do well was Reliance, SBI, TCS. So overall, a strong traction, 121 points on the gaining side and 22 points on the declining side. But Agam, second strong day. What's the FNOQ like? Are we seeing significant amount of put writing? I believe the PCR must have rallied significantly.
It certainly has, Darshan, and coming to that as well, let's first, before we go to the options, as Darshan was mentioning, we've seen a lot of put writing coming along. Let's also take a look at what's happening in the futures, with longs building up, with the open interest for futures moving up by as much as 2.3%. In terms of the Nifty Bank as well, there too we have seen unwinding, that is short covering. coming along as far as the open interest goes, so we'll be watching out for that. And with that, the put call rate, the India VIX, of course, naturally has fallen, considering the Nifty has moved up, so now below the mark of 14 at around 13.7 to be precise. And moving in, the put call ratio, of course, has edged up higher, substantially higher, in fact, now at around 1.26 as against 0.91. But in terms of the big changes in open interest that we are seeing, we've seen a lot more writing in the 10,200 mark, and of naturally unwinding in 10,400 and 10,500 calls as well. What are we watching out for in terms of stocks? Well, there are two stocks which have moved into the ban, so JP Associates and JSW Energy likely to see restricted trade. But that said, we're also looking at Pidilite, which has seen a lot of strength, in near 28% increase in open interest, so fresh longs building in there. And Mindtree, of course, has seen some amount of weakness seeping in, so well, fresh shorts building in there as far as Mindtree is concerned. So these are some of the stocks that we'll be watching out for. But other than just these stocks, we're also keeping an eye on Bitcoin, which has now started trading in terms of futures in one of the US's major exchange for the first time on Sunday evening. And Bloomberg's Yuji Nakamura wraps this up in this report.
What we saw with the first hour of trading is about $9 million in notional traded on the CBOE across all the contracts. And then just to put that into perspective, over the same period of time, about roughly $300 million traded globally on Bitcoin exchanges, Bitcoin spot, against the dollar. So for now, the futures are really just a drop in the ocean. Having said that, I think, we are seeing consistent buying or selling, activity every single minute, just one or two lots, the minimum sizes. I think what that shows us is there is demand for this product. But usually on the first day of a futures contract, you see very little activity because brokers will just kind of test their systems, make sure that the trading is working, make sure that settlement is working. But today, right out of the gate, we're seeing 1, 2 contracts being bought consistently every single hour. So the notional so far isn't huge, but it's not a bad start. As for your question on who's doing this, the CBOE contract is geared more towards retail people. It is smaller. It's about $16,000 in notional right now, versus the CME, which goes live in a week. That's more for institutional traders. That's about 5 times bigger than the CBOE contract. So I think the CBOE is more geared towards retail, and that's probably who we're seeing trade. For example, Interactive Brokers have said publicly that they will support it from day one. This is just a guess, but I'm guessing retail traders are the ones just buying and selling here a little bit early on so far.
Back to the local equity market, stock of the day is Omax Auto on the back of good set of numbers reported by the company. If you look at the revenue, that's an 11% jump that we're looking at a number of around 289 crore as compared to nearly 260 odd crore that you've seen in the corresponding quarter of the previous year. Net profit, for that matter, it's a threefold jump, more than threefold jump, that we're looking at a number of 3.28 as compared to less than a 1 crore figure that we saw in the corresponding quarter. EBITDA performance, the operating performance has been good enough for this company on year-on-year basis. We've seen a jump of as much as 34% at a number of around 13.7 crore. Margins have expanded. They've expanded to 4.8% as compared to 3.9% that we've seen in the corresponding quarter. Now, what has led to a good set of numbers? A will be your cost efficiency along with your higher revenue, which has led to a jump in your operating performance. Now, operating performance along with your lower depreciation and tax credit is what has led to good set of numbers on the bottom line front. The company has incurred a tax credit of nearly 1.9 crore in this quarter as compared to an expense of 55 lakhs in the base quarter. The profits have risen despite a sharp decline in lower other income. Now, other income has slipped by 50% on year-on-year basis to a number of around 1.6 crore in this quarter. And just to give you a little background about what the company is, well, we're talking about an auto component manufacturer which has a market capitalization of around 150 odd crore, and it is a long-term supplier to your companies like Bajaj Auto, Tata Motors, Hero MotoCorp for that matter. With this, let's toss it over to Saloni for rupee and bond market update.
Thanks for that, Nikki. So, talking about Indian rupee, it snapped its 3-day losing streak on Friday and it ended 12 paise higher at 64.46 levels against the dollar. Now, the home currency strengthened after local equity market gained for the second straight day. And on a weekly basis, the rupee settled on a flat to positive basis. Elsewhere, the foreign exchange reserves data once again crossed the $400 billion mark for the week ended 1st December, thereby marking a fourth consecutively weekly rise since November 2017. Now on the global front, dollar gained against other major currencies on Friday after the release of better than expected non-farm payroll data. Now this data comes in right before the FOMC meeting, which is scheduled to start tomorrow. Now according to a Bloomberg survey, the odds of a rate hike now stands around 98.3%. It considers a 25 basis rate hike in this meeting. Now elsewhere, the pound dropped as much as 0.9% on Friday despite a breakthrough in Brexit negotiations, as the market now awaits further clarification on the trade talks between these countries. Now coming back home, dollar rupee is trading flat in the non-deliverable forward market. Moving on to the debt market, sovereign bonds declined for the second straight week, thereby propelling the benchmark 10-year yield to its highest close in over 15 months at 7.09%. And lastly, global funds increased their rupee debt holdings. They infused close to 40 crore according to NSDL data. Well, that said, Jayesh, how are commodities pairing out today morning?
Morning, Saloni. So let me start off with oil prices, which actually saw a 1% uptick as of Friday's close. Now, this is on the back of Chinese demand, which is, spurring global outlook. But on the other hand, what didn't do well was the oil rig count in the US, which has come in at its highest level since the month of September. Also, we have a comment from the oil minister of Kuwait, who says that, OPEC and Russia may look to end the production cut before 2019. Of course, this will only be if the oil market actually rebalances before that. As far as brokerages are concerned on oil prices, we have a note from JP Morgan in which they have raised their 2018 price target for Brent from about $58 per barrel to $60 per barrel. Moving on to the industrial metals, we saw LME base metal index, which actually posted its worst week in over a year. It ended the week down nearly 4%. So all the industrial metals, they closed mixed on the London Metal Exchange as of Friday's close. Zinc and nickel ended lower, while aluminium, copper, lead and tin actually advanced. However, the same case cannot be seen on the Shanghai Futures Exchange, where we are seeing positive bias come about for all of the base metals. So copper, zinc and aluminium are trading with a positive bias, whereas steel has actually gained as much as 3%. Moving on to the precious metal space, we are seeing some bit of softness come about for gold prices, which have actually posted their worst week since the month of May. Also, that the prices have now slipped below the 1250 mark. Now, two primary reasons for this. One is the US rate outlook and also the FOMC meet later in this week, and also that there has been some strength for the dollar index, which actually closed positive on all of the days last week.
Well, amongst the stocks that we're tracking today morning is Hexaware Technologies, and that is on the back of an ET report which says that PE fund Bearing Asia is looking to sell up to 15% stake in the company. In fact, the PE firm, the report says, may offer multiple block deals, and these block deals are likely to happen at a 1 to 5% discount to the current market price. So we could see some negative reaction on that name. Do keep a watch out for Hexaware Technologies. You also have an ET report which talks about Axis Bank and Bank of Baroda, both of which are said to have sold a part of their SR loans, and that is at a sizable discount to Deutsche Bank. Now, Axis Bank is said to have got less than 60 cents per dollar, which means they've taken a haircut of close to 40%. In case of Bank of Baroda, they have got about 71 cents per dollar, again a haircut of close to 30%. That may not be as steep as the markets were expecting in general as far as some of these accounts are concerned, but those are the stocks to keep an eye out for. NBCC, where the government will sell 67.5 lakh shares. via an offer for sale, and that will be to employees of the company. Now, the offer for sale price has been set at 156.12. That's a sizable discount to the current market price, and this OFS will remain open from 28th December to January 5th. So watch out for that name as well. We're also tracking IL&FS Engineering on the back of an order win of 216 crores from GAIL. Now they have to complete this in a period of close to 15 months or so. We're also looking out for the names of Power Grid, where the company has entered into an agreement with Asian Infrastructure Investment Bank for $100 million. Additionally, they also said that the board has approved 2 investment proposals which are worth about 270 crores. And lastly, we are also tracking Ultratech Cement, where the board has given an approval for greenfield expansion in Rajasthan, and that will be with an investment outlay of about 1,850 crores. Additionally, the board has also given an approval to increase the foreign investment limit in the company from the current 30% number to 40%. So those are some of the stocks that you need to watch out for in trade today.
On brokerages, first we have is Jefferies on Reliance Industries. Now they have downgraded the stock to underperform from hold, but have raised the target price to 790 from 626. Now, according to Jefferies, Reliance Industries EBITDA may double to $20 billion by financial year 2022 or 23, but much of this is already priced in. Now they're expecting the refining margins to ease off from the FY18 highs as refining demand and supply turns less benign. Now they're saying the overall capital expenditure for the company would be lower as compared to what it was in the past, but would continue to stay at elevated levels, led by the telecom segment and the E&P segment. On the telecom business, they are saying that ramp up would be difficult as the average revenue per user and subscribers would not rise together for Reliance Industries. On the return ratio side, they are saying that return ratios would be modest and net debt would be higher going forward. Finally, according to the brokerage, valuations of Reliance Industries are rich and appears to have brushed off all the possible risk going forward. Also, post the current run up, they are saying that it will be stiff hurdle for Reliance Industries to outperform from here on. Second, we have is HSBC on Motherson Sumi. Now they have maintained their buy rating on the stock, but have raised the target price to 425 from 376. Now Motherson, which is already a strong player on operational side, is now increasing focus on innovation and integration, and the brokerage expects this focus on innovation and cross-selling will support business growth going forward. It remains positive on Motherson as the company is well placed to benefit from the increasing role of auto component suppliers going forward. Also, Motherson's innovative product and on camera based technologies is positioned it for higher for long-term growth. Also, the recent fund raising will help Motherson for multiple acquisitions to achieve its 2020 goal.
Well, some more stocks to watch out for based on the cash market volume as of Friday. First up, we have Future Consumer, which was up nearly 16% as of Friday and saw delivery buying of nearly 100 crores. The delivery volume surged more than 5 times at about 1.5 crore shares versus the 10-day average, and the total volume too surged nearly 6 times at about 4.8 crore shares versus the 10-day average. The second stock to watch out for would be Bombay Dyeing. It was locked in upper circuit 10% on Friday, saw delivery buying of nearly 80 crores. The delivery volume more than doubled at about 35 lakh shares versus the 10-day average, and the total volume too surged more than 3 times at about 1.5 crore shares versus the 10-day average. The last and final stock to watch out for would be JP Associates. It was up 6% as of Friday and saw delivery buying of nearly 70 crores. The delivery volume was up 194% at about 4 crore shares versus the 10-day average, and the total volume too surged about 200% at about 14 crore shares versus the 10-day average.
On to the most awaited event of the week. 89 out of 182 constituencies went to polls in Gujarat on Saturday, and 66.8% voters exercised their right to vote, which was lesser than the 71.3% recorded in 2012. Voting for the remaining 93 seats takes place this Thursday, and the results will be declared next Monday, December 18. Prime Minister Narendra Modi in a tweet thanked the people of Gujarat for the large turnout and said that the BJP is heading for a historic victory. On the other hand, the Congress party said that they were confident of victory unless there is some mischief done with the electronic voting machines. There were reports of malfunctioning EVMs in Surat, to which Finance Minister Arun Jaitley said that such incidents are expected in such a big election. And Rahul Gandhi, who's been heading the party's campaign in Gujarat, did take some time out to enjoy the food and culture of the state. Here's how the Congress president in waiting unwinds during his hectic campaigning schedule. There's lots to talk over the course of the day, and you'll find all the live market action on Bloomberg Quint. There are also a few stories that you should consider reading on the website bloombergquint.com. Here they are. India Inc. promises better pay hikes of 10 to 15% for the right talent in 2018, and after a long and challenging year for the job market. Stunned by post-demonetization layoffs in traditional sectors like textile and due to the advent of artificial intelligence in the new age ones. And former RBI Governor Y.V. Reddy said the economy requires 2 more years to consolidate and claw back to higher growth levels, refusing to hazard a guess on GDP growth in the short term given the shocks like GST ban, note ban, as well as bad loans. And with that, it's a wrap on this edition of All You Need to Know. Up next is Indian Open.